Crypto is getting absolutely cooked right now. After a half decade in the industry, this is honestly some of the worst I've ever seen sentiment. And in this video, I'm going to break down exactly why Bitcoin and crypto have dropped so much. And even though that's retrospective, understanding how we got to this point is going to be important to understand when we bottom and may start to rebound. Now let's get into the video. Now I'm going to pinpoint 3 reasons why crypto and Bitcoin have been dropping. And there are others that contribute to it, but I think these are the 3 most important. And 2 of them tie into macro situation, and one of them is more crypto specific, but I think all of them play a role. So before we get into that, let's break down exactly where we are in the market right now. And I'm just going to pull up CoinGecko to show you the sheer amount of red. Past 30 days, Bitcoin down 13%, Ethereum down 24%, Solana down 35%. Cardano is actually up. There's a few other tokens that are up. Leo, Pi Network launched their token, but generally speaking, everything's getting cooked. And if you move further down the risk curve, look at meme coins, look at things outside the top 100, then you're going to see a lot of things that are down 50% or more. And a lot of them were already down before that, right? You've got tons of things that are down 90, 95% from their peak, maybe even more in just a month or two. And so the market is in, at a minimum, a serious correction, at worst, a bear market. And if you look at Bitcoin itself, you can see that this drawdown has been fairly dramatic, although we are still firmly above where we were in November. And in fact, if you go back to any point before November, where we are now would have been an all-time high. So, perhaps that's concerning to some of you, right? Your token's down 90% and you say, oh, Bitcoin's still above its all-time high from earlier in 2024. And honestly, it is concerning because if you look at total 2, which is the total altcoin market, everything but Bitcoin, well, there's some cutoff of things that are too small to be included, but basically everything but Bitcoin, it's down 44% from its peak in December. Pretty substantial. And if you look at others, which is everything outside of the top 10, then you'll find that it's even more dramatic, down around 56%. And so why exactly is this happening? Like I said, I'm going to focus on 3 reasons here. First reason is that people are de-risking. There's concerns around tariffs. There's concerns that we may be entering a recession, in fact. The Atlanta Fed is now forecasting GDP to be down over 2% in Q1. There's concerns around the tech sector rolling over. It's been on a tremendous bull run as well. And so people are starting to de-risk. And crypto is the most risk-on asset class. And then if you move down the risk sector in crypto, you look at meme coins, look at AI tokens. Those are even the most risk-on part of the most risk-on sector, and people are de-risking. So what's the first thing they cut, right? They cut those kinds of things. And you know this because crypto has been in a dip in altcoins in many cases since December, but let's say since the Bitcoin peak in mid-January. But it's really the past couple of weeks that the major indices have gotten hit. Dow Jones roasted, NASDAQ roasted, S&P 500 roasted. People are now de-risking from equities as well. And my friend Alchemist Investor, one of the smartest macro guys I know in crypto, big TradFi guy, Anon, I know him in real life, but really smart guy. And I'll link this down in the description, but he wrote out this way of looking at the dip as you look at which stage in de-risking people are on. So they might start with something like meme coins, which have no inherent value. Then they'd go to altcoins, and then they may go to, for example, momentum stocks. So he says these would be real businesses, but unprofitable. And then he talks about like some meme stocks as well, getting to the Magnificent Seven, getting to the S&P 500, and then eventually getting down to things like bonds and gold. And then again, I'll link this down in the description, but his conclusion here is basically that we are pretty far into the sell-off, because you're even getting things like the Magnificent Seven dipping, and we are in correction territory for the indices. However, we haven't seen a full de-risking yet, and it's not necessarily a screaming dead bottom to have the S&P 500 down 6%. That is a non-trivial dip, but there certainly could be more downside. Similar to what I was noting earlier with how Bitcoin is actually still relatively close to its all-time high. The second reason that crypto is dipping is because of global M2. Here is a really interesting chart. Bitcoin tracks global M2, which is one way of measuring money supply. And you see that typically Bitcoin lags global M2, which you could argue why this is. It could be because, similar to risk on, risk off, money supply goes up and then some of that money finds its way to Bitcoin. You could think of it as being because Bitcoin is a form of non-fiat currency. However, look at how closely this tracks, and you see global M2 peaked back in December, dipped, and then Bitcoin has been following, and then global M2 has been rebounding. So if this continues to rebound, then that would be good, because that would mean we're relatively close to a bottom, and Bitcoin would start to follow at some point, and we'd expect to be pushing upwards in the next couple months. And the third reason I'm going to say why crypto is retracing so hard is honestly meme coins and how value extractive they were. And what I mean here is you had literally millions of tokens launched over the past year. Most of them never went anywhere, right? Their peak market cap was probably in the 4 digits, maybe some that didn't even make it that far. But in cumulative, they were dominating crypto volume, and in cumulative, massive amounts of money was extracted, hundreds of millions of dollars, if not billions of dollars, both from some of the applications used to facilitate trading of them. And some of that money certainly stayed in the crypto ecosystem, right? I mean, it's good and fair that people can build businesses based on trading, but much of that value was extracted, and some of it from the people creating the coins. And you had that both on a small scale with they call them devs, but they're really deployers, right? Because no development is involved, who perfected the art of launching these coins and then just would sell, repeat, and use it as a way to make money. So you had new retail people entering crypto. And then the other group would be the large coins, right? Things like Libra, that ran to billions of dollars before crashing. But you had new people entering crypto, okay? And they saw that ETFs were happening. Bitcoin, they saw Bitcoin was going up. It wasn't dead after FTX. They saw that the US regulation was turning favorable. And they enter crypto. They search on social media or whatever, find meme coins, buy them, or they enter crypto specifically for meme coins, lose their money, and leave. Or if they're still in, they don't have any money to buy anything, right? Everyone lost all their money. Now there's this concept of, I don't remember who came up with it, but you've got price capitulation, then you've got time capitulation. You got time capitulation because people need a reset. They need time to make more money to invest if they're buying some of these things, but make more money to invest, and they need time to regain confidence in the market, and then the market needs time for new narratives to form. I mean, like, look what narratives are good right now. There's certain chains that are good. I've talked about them. Sonic is growing, Berachain's growing, but there's very few, DeFi in 2020, NFTs in 2021 type things where it's like a new narrative, new type of application that's starting to take off. And so you need time for those things to form, and you need time for people to make their money back and regain faith in the market. And that doesn't happen overnight. And now that you've got these other macro factors involved, you've got a lack of new narratives in crypto, prices are resetting. And in many cases, they're resetting to what they would be if they were closer to a fair value for the applications related to them. By the way, if you want to learn more about how to use metrics and usage to track crypto, newsletter for that, newsletter.dynamodefi.com. Send out a couple every week. involving heavy use of on-chain analysis, recommended readings. That way you can get everything you need in just a few minutes a week, as well as tools to help you learn how to do this analysis yourself. If you want YouTube to show you more videos like this, be sure to like and subscribe. Thanks for watching, and until next time, this is Dynamo DeFi.